Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information. Matt, thanks for taking some time to join me on the show.
Pleasure. Thanks for having.
It's good to be back in person. Last time we did this, it was remote. It was early days for the Australian Business Podcast in particular. Being on a coaching call with some business owners this morning, the Birchal name has definitely expanded.
Awesome.
Investors on one side and business owners on the other. It is clear that more and more of both sides know what's happening now. And you guys are dominating the industry, which is wonderful. So maybe just to start off with, we get a lot of businesses who are thinking about building a platform. And typically when we say platform, we mean there's like two sides, maybe three sides sometimes, but there's two sides to that platform. You've got, in your case, investors looking to buy into businesses, and you've got businesses looking to attract investors. And you obviously sit in the middle and facilitate that. And often I think it's almost chicken and egg, which one comes first? So just as a general question about business, how do you build something like that?
Yeah, it's a great question. As an aside, Birchal was really honoured and privileged to have a Harvard case study written on us on this exact question. And it's something, there was a professor of marketplace design, Scott Commoners, he's a professor at Harvard Business School and was doing some work with Melbourne Uni and spent some time with us. And there is a published case study on Birchal's choice in the early days as to which side of the market that you look at. For us, we focused on founders. And I'm not sure that it's necessarily a universal principle that applies to every marketplace. And I don't know necessarily that we had the foresight. It was really out of necessity. You know, this adage that necessity is the mother of invention. For us, we had zero distribution.
Yeah.
But, and we can get into this, but what changed when the crowdfunding legislation was put in place and the industry started was that overnight it became possible for companies to make a regulated offer of securities and market it to a national audience. That's 20 million people that could not access these opportunities before, and companies couldn't advertise to. So there were other platforms in existence that were operating in the unregulated wholesale space before the crowdfunding legislation was passed, and they were our competitors. So when we were speaking to companies, there were people that were operating platforms that had small-ish audiences of investors, and we didn't have that. So we decided to focus on delighting founders and making the process as easy and seamless for them as possible, but also the belief that this list, the old way of doing things, the old way of early stage capital, this notion that an advisor or someone would cultivate a list of investors and then charge companies for access to that list. We believe that in an environment where you can tell your story to a national audience, the list doesn't matter anymore. And that was our story. So we focused on founders. And it's proven to be the right strategy. No one knew Birchal. It's great to hear that, you know, that the brand is resonating with people and people have some awareness about what we do. But in 2018, when we launched, to go out to market and say, you know, we are Birchal, would have been an expensive exercise to grow the business that way. And we bootstrapped at the start. We didn't really have anything. So we decided to focus on businesses that were interesting, had a story to tell. And by telling their story, then we could draw people in. And it worked. And it's enabled us to build arguably the biggest list, the biggest audience of early stage investors in the country. But the first phase was really focusing on the founder side of the market. And if you think of a marketplace as a store, customers don't want to go to a store with no stock on the shelves. There's no point. So intuitively that was the right call for us. But as our platform has evolved, we've started to see investors take a portfolio approach and more of a general understanding of what this is as an asset class. Increasingly, we're focusing on the investor side of our audience and understanding more about what motivates them, not just for a single investment, but as an opportunity to invest in an asset class that they haven't been able to access before.
I know on our Australian Investors podcast, which is our most advanced investing channel, definitely the last 2 years has seen people take such an interest in private markets, so investing in companies that are not on the stock exchange. They hear about it, they kind of, they see tidbits of it from the podcasts or whatever. They see businesses all around them, but they've never felt like they could access it. And all of a sudden, along comes something like Birchal and opens the door. And it's been really interesting to see them react to that. For folks that aren't familiar with the Birchal brand or the Birchal business or even crowdfunding per se, can you just go back a moment and just tell us about the business, how it started and what it is that you do?
For sure. Birchal helps companies tell stories, build communities and raise capital online. And we do that under Australia's crowdsourced funding regime. Mm-hmm. So it is equity crowdfunding. It is different to ordinary crowdfunding. When people think of platforms like Kickstarter and Indiegogo, that's a different model of crowdfunding, reward crowdfunding, where you might get something that's nominal in return, but you don't get shares in a company.
Yep.
And I think it's worthwhile just to spend some time explaining the distinction between the two models, because often what we do is still relatively new in Australia, and it's often walking people back from what they think they know about what we do. But there's one company and one example in the States that I think is great at highlighting the distinction and the friction that exists between reward crowdfunding and equity crowdfunding, which is what we do. And that is Oculus. Many people are familiar with Oculus. That started, and I can't remember whether it was Kickstarter or Indiegogo. It was one of the platforms, but they started as a reward crowdfunding campaign before they'd built the headsets. And people were backing that project so they could do their first run of headsets and bring that product to life. I think they had a $200,000 target. They ended up raising $2 million. But it was pre-purchased. People were buying the headsets that they were ultimately going to produce. Within 12 months, Oculus had been acquired by Facebook at a $2 billion valuation. And that's now, the MetaQuest and all of these things, that is Oculus. But for the people that backed that crowdfunding campaign, many of them were still waiting for the headsets. And as a startup investor, that's incredibly frustrating. You've just identified and backed a double unicorn, but you don't have shares and you're still waiting for the headset. And had it been an equity crowdfunding campaign, those investors would have got an exit and everything that startup investors are looking for. So I think it's a great example of the distinction between the two models. Now, the UK is probably the pioneer for equity crowdfunding. And a company called Brewdog, a craft brewer, was the archetype and really pioneered this model. 2009, in the wake of the GFC, capital markets had seized up. They decided that they wanted to raise capital from their most passionate fans, and they called them the equity punks, that anyone could be a venture capitalist. And they raised, I think, close to £1 million from around 1,000 investors, and they've gone on to become the biggest independent beer brand in the world.
Wow. Equity
crowdfunding platforms then started to emerge in the UK, and Crowdcube and Seedrs, which are the two platforms that command 90% of the market in the UK, started around then. And that industry has gone on to be perhaps the biggest industry in the world for equity crowdfunding. And around that time, Australia was thinking about whether we should have something similar. And that's when I, as a lawyer in private practice, started to become interested in equity crowdfunding. and what was happening over there. And I got involved in government consultations and then tracked the development of the industry and the consultation on the legislation. And then finally the legislation was passed in 2017 and the industry started in 2018.
Wow.
So it is a way for early stage businesses to make a public offer of securities regulated under the Corporations Act. And it's something that previously has only been the domain of public companies and often involves hundreds of thousands of dollars of professional services fees, teams of people to bring these opportunities to market. And that was the world that I lived in private practice. And I saw this as an incredible opportunity for all businesses to access equity capital in a way that has previously not been possible, and start to think about how they source their capital in a far more sophisticated way, the way that large companies do. Equity is a critical part of a capital stack. Debt has a role, government funding and grants. But before the crowdfunding legislation, it has been cost prohibitive for people to raise, a scalable amount of capital and limited to family and friends or very relationship focused. So this busts everything open, and it's incredibly exciting to be part of the creation of a new industry.
How big is Birchal now, or even relative to the industry or just in numbers, to give people a sense of where we're at?
So Birchal has hosted over 270 successful offers since we launched in 2018, over $210 million invested through the platform. In 2023, the industry raised just over 70 million and Birchal was approximately $52 million of that. So
wow,
we've had greater than 70% market share for funding volume since 2020. And the industry has been relatively stable over the last few years. So those figures in 23 were broadly the same in 22 and 21 in calendar years, which is great, particularly given the volatile and challenging funding environment that we've experienced over the last few years.
Yeah. Do you find, in terms of the investor numbers, do you have anything off the top of your head? And sorry, I'm asking you for numbers off the top of your head.
All good.
But anything around the total number of investors that might have participated in equity crowdfunding?
Yeah, so there are many investors that have invested in multiple campaigns, but adjusting for single investors, it looks like approximately 130,000 investors.
Wow.
And ASX data puts the investor market in Australia, so people that have an investment other than the family home and super, at just over 10 million. Australian adults, people over the age of 18, is around 20 million. So we've, I think, fairly quickly penetrated that investor market. But if we look at the UK experience, even adjusting for per capita, that infers that the Australian market could be 10 times the size it was last year in 2023.
Wow.
And that's that's international research from Andrew Schwartz, a professor out of the University of Colorado that has been researching equity crowdfunding regimes around the world since these started to emerge 10 years ago. And Australia has very quickly, from a late start, New Zealand has had an equity crowdfunding regime longer than Australia's. They were 2014, we were 2017. The UK and the United States prior to that. Australia, although late to the party, has quickly become the second largest per capita. But yeah, still
a ways to go.
Away from the UK. Yeah.
So to really cement this in people's mind, why would a company come to Birchal and use this mechanism to get capital? And maybe as you answer that, an example might help. Or just maybe even explain the alternatives that they previously would have.
Yeah. let me start with the alternatives. Before equity crowdfunding, most business owners, whether they realize it or not, when they're issuing shares in their company, when they're raising capital and issuing shares in exchange, they're applying what's called the 2012 rule. So the starting position, if you're raising capital, you need to issue a regulated disclosure document. And the apex of disclosure is a prospectus. That's what public companies issue when they're raising on ASX. Now, people raise capital all the time from privately and family and friends and things like that. And they may not think about it in that way to kind of figure out where in the act it applies. But usually it's that exemption. But what that means is, you and I can talk about the opportunity. I can't tell anyone else about it. Like, you can't put it on your website and, be on social media. Well, people do, but they shouldn't.
Yeah.
And that, particularly given the modern environment that we're living in and, all of this technology,
Access to
communications technology, absolutely, that becomes harder and harder to sustain. And there is this world out there, like what we're doing, and all of the people that are listening. There is just all of this opportunity for people to, hear stories and getting involved with other people. And those laws before crowdsourced funding were incredibly restrictive for businesses that have a story to tell. Then you've got professional investors. And as I've mentioned, like the old model, often for an advisor who would cultivate a list of investors, whether, they're a wealth advisor or others. But, the model is charging companies for access to that list. And often these advisors, they're trading on, their reputation. They're thinking about their investors and they're only wanting to put good opportunities out to their investors. And that means that, companies often spend a lot of time working on, their documents and their data room, only to get out there and find that no one is interested. And that can involve, tens of thousands of dollars of costs and, a lot of time and preparation. Then you've got VCs and professional investors and others. And this is an industry that has emerged and grown significantly, particularly over the last 10, 15 years. But that tend to be focused on certain types of companies for a variety of reasons. But companies that have a high opportunity to scale. There is an overwhelming bias towards B2B SaaS type businesses among VC investors in Australia. Food and beverage companies and hardware companies. Many of them will talk about the challenges they've had in finding investors that are interested in their opportunity, that will accept the particular risks and nuances of those. So if you're a founder of whatever business, these equity capital options have not been great. So what they end up doing is using financial products that aren't appropriate for them at the early stage. If they've got a mortgage, then redrawing on that, maxing out credit cards, all of those things. And there probably is always an element of that to get you from 0 to 1. That's startup life. But then that can only get you so far. For entrepreneurs, capital is the fuel that helps them achieve their dreams. So what this does is it enables companies to raise equity capital to demonstrate the value of owning a share in their business and do it in a regulated way. And the government spent a lot of time thinking about the appropriate consumer protections that needed to be in place for this to exist. And there are some really, I think, innovative and great features of the crowdsourced funding regime that enable that. So standardised disclosure. Every company needs to prepare a regulated crowdsourced funding offer document. It's a regulated offer document it sits alongside a prospectus. It's a cut down version of a prospectus, but it is recognised as a regulated disclosure document under the Corporations Act. 5 business days to cool off. Change your mind if you're an investor. No questions asked. A regulated discussion forum. Hot Copper is kind of this online forum that people talk about listed stocks predominantly. Every crowdsourced funding offer on a platform needs to maintain this communication facility where anyone that is looking at the opportunity can ask a question of the issuer in real time and expect a response.
Is that why when I go on the Birchal platform, I can see like the founder or the management team responding to questions?
Yep, absolutely.
Ah.
Which, I mean, it was when it was being talked about and drafted into, legislation and guidance. It was one of those things that had never been done before. Like, how is this going to work? And we're 6 years in now, and it's working really well. And many people are taking that opportunity up. And I think it's a great consumer protection because it strikes the right. It's a nice counterbalance to a cut down version to the disclosure document. It's a cut down version of a prospectus. So what the government and what the regulator is saying is, we acknowledge that these are going to be early stage businesses that are raising capital. You need a standardized disclosure document that sheets home liability to the directors that have to be responsible and be accountable for the things that they're saying in that document. But to the extent that it doesn't give investors all of the information that they need to inform themselves, they can ask more questions. That opportunity is there and is available to them. And there are limits. So retail investors can invest up to $10,000 per company per year. Wholesale investors can invest above that amount. So there are lots of, I think, robust safeguards in place for what is a privilege to be able to raise capital from the public, but then also a right. And I think this is probably the other point to make is Birchal is a crowdsourced funding intermediary. And perhaps this is the answer to the question that you asked. Sorry, it's taken a long time. But this is a regulated way for companies to raise capital. And in public company land, ASIC will go through an exposure draft process and review a prospectus and give comments back to the company and then it's approved and it'll be out there and they can raise capital under it. But the government was expecting, and it's happened, that many companies will want to use this regime now to raise capital. And ASIC didn't have the resources. I guess the view was that ASIC didn't have the resources to do the things that intermediaries do, to review hundreds or hopefully one day thousands of these documents, that there was a role for a licensed intermediary to play. And Birchal is one of several intermediaries that are out there, but our role is to make sure that companies are making eligible offers, that the offer document is presented in a clear, concise and effective way. It aligns with ASIC's guidance and expectations for how these offers are presented. And I mean, that's what the government was doing when they put this legislation in place. It is an open invitation for people to start businesses and perform that role as an intermediary. But I think it's an important point because the only way that a company can raise capital through the crowdsourced funding regime is by making an offer on an intermediary's platform. So we always, I think, have to remember that this is a right that exists under the Corporations Act now. Like, the government passed the legislation to improve the flow of capital to early stage businesses in this way. So people have a right to be able to access, founders have a right to be able to access the crowdsourced funding regime. And that is definitely a factor in our role when we're dealing with companies, is that, people should be able to exercise that right to tell their story and find an audience and raise capital.
Mm-hmm. I love it. I might bring it back to an example, and I might use the example of Rask, our business.
Yeah.
So Rask is obviously a company. We've been operating for a few years, and say we want to get some capital in the door to reinvest. I could mortgage my house, maybe up to 100% if they let me, take that money, chuck it in the business. I could go to a bank and try and get a bank loan. I could go to some type of professional, or I could say to everyone listening to this and to our community, hey, we want you to be part of this. We think what we're building is great. We need a facility, a way to allow you to invest. And traditionally, we wouldn't have been able to do that. But if we came to a platform like Birchal and said, what do you guys think? You guys would effectively oversee that process, make sure we're compliant. And we get capital as a business. Then we get shareholders, of course, who can then take part in the growth of the Rask Group. Have I got that correct?
Absolutely.
Yeah.
Absolutely.
And so what types of businesses are suitable to this? Because we have literally thousands of businesses that listen to this, as well as over 100,000 investors. So let's start with the businesses. What types of businesses are suitable?
Yeah. We think every offer should be a crowdsourced funding offer. But as an industry, because what we do is fairly new, we've in an environment where we can advertise to a national audience of investors, we decided to focus first on businesses that are interesting, that have a story to tell, and that can benefit from raising capital in this way, appealing to a wide audience of people. In the States, some of the platforms are calling these community rounds now and using the term community funding rather than crowdfunding, which I think is far more helpful to explain what this is. Because in a sense, building a community is exactly what companies are doing. And but interesting businesses, it's broader than B2C type businesses. So we've absolutely hosted offers for craft breweries and distilleries and lots of these types of businesses. I think sometimes people think that's the extent of what we do, that it's just B2C consumer-facing businesses. The reason why we've had lots of success there is because it is a marketing exercise. We're trying to find people that are interested in your offer. And if you have a product, to a customer, if you already know about your customers, that gives you an incredible head start in finding the natural audience for your deal, because you can take the view, and I think it's a reasonable view, that someone that buys your product might also like to invest in your business. But there are lots of companies that we've hosted offers for that don't have a product or service to an end consumer, but they're interesting or they're operating in a space that is impactful, on a mission that people identify with, doing some good in the world that needs to be amplified. And in that regard, they are also building communities. They're aligning support for people to be on their mission, sharing their mission and their vision for their business and what they want to achieve. But I think that's the mindset that people need to be in. Increasingly, though, and what I hope this industry will achieve over time is that people will recognise the incredible power and the efficiency of being able to organise around in this way. And I say people should think about crowdsourced funding as a vehicle rather than a discrete source of funding, because we've had VCs invest through the platform in deals, lots of angel investors, high net worth individuals. It's a vehicle for companies to organise lots of different types of investors into their round. It's just that in the early days of this industry, it's the interesting businesses that have captured people's attention, and why Birchal's kind of brand awareness is increasing, because people identify with the brand and the story that's being told in a really powerful way.
Mm-hmm. So let's say, for example, that I was like, okay, we come knocking on your door tomorrow, and I say, What's the average deal size? What's the average on the platform so far?
It's around 700,000 at the moment. It's reduced a bit this financial year, but yeah, it's around 700,000. At times, it's been over $1 million. The largest raises we've done is $5 million. That's the statutory maximum within a 12-month period, and we've achieved that twice. So,
wow.
Yeah.
So say, for example, I'm a bit more humble. I'm like, okay, $500,000 is what I need to fuel the next wave of our company's growth. So I work with your team, prepare the documents, and then investors that can then go to the Birchal platform and review that, right? Say the deal, I'm successful, I get, say, $450,000 or whatever. What happens then? Like, if I'm a business owner, I obviously have all these new shareholders that I now need to communicate with. How do I do that? Like, what happens after the raise?
Yeah. So companies will end up, the way that this regime operates is that people are issued shares directly. So if you execute successfully, you will end up with hundreds, thousands of investors. Mm-hmm. Birchal we've done this twice.
You've been through your own process.
Twice. Yeah, that's right.
Yeah.
So we have approximately 1,600 shareholders, and we're a proprietary limited company. So, very similar to, the experience of many of the companies on the platform. Birchal runs the application facility. We collect the money. We hold the money in a statutory client money account, a trust account. Once the offer is successful, we send settlement instructions to the company. We say, here are all the investors we're holding the funds for. Please issue shares to these people. Now, companies will use an online share registry service. There are many out there now, Cake, Automic, many of them. Some use, the computer share and link that listed clients use. So that is where people will issue shares from, and that investors will be able to see their shareholding and download their share certificates. Once we see that the shares are issued, then we'll release those funds to the company, and we'll repeat the process in batches until settlement's done. Usually the vast majority of funds are settled within the first 7 to 10 days, and then kind of the remainder over the following weeks. So then a company ends up, they get the capital, then they've got shareholders that are holding shares. How the company manages that audience will differ from company to company. We say, companies should really be updating at least quarterly with a business update to their investors. From a regulatory perspective, I would say the barrier is pretty low. You need to prepare an annual report. It doesn't necessarily need to be audited. There are some situations where you need to appoint an auditor and have your accounts audited. But otherwise, general purpose financial statements and your annual report, you lodge that with ASIC typically by 31 October every year, and you make it available to your shareholders. That's what you have to do. It's not uncommon for founders to hear that, but then also think about hundreds, thousands of investors, and you can see the look of terror, and that's natural. But what we say to companies is, you get out what you put in. You need to look at your community as an asset, and they can help you. They can help you with advice and guidance. There might be some people that they've invested because they love your business and they feel that they can help you other than capital, and there've been lots of examples of that. If you've got products that you're already selling to people, it's an incredible way to get people to align to your brand and be ambassadors and encourage other people. If you've invested in a gin company, and what's the gin that you're going to buy when you're in Dan's and pull off the shelves? Like, I know I've done it myself. It's a great way to align with your most passionate customers. So the companies that do this well get that you get out what you put in. In terms of product development, a company we hosted an offer for Friday, they raised money pre-launch, pre-product. They've built their product using their early investors to kind of feed into what they need. They make it's like an accounting software package with a bank account that will automate tax for reduce financial admin for business owners. So there's so much that this community can provide you other than capital. But around 20% of companies come back to Birchal for follow-on raises. So they're a great source of follow-on capital as you grow and execute your plans and grow the business. They're there to support you as well. So, companies need to feel through what is right for them in terms of cadence for reporting and what kind of information. For Birchal, we used to report quarterly. We've transitioned to monthly now, and we've had great feedback. I think we felt that we were probably putting, too much or more pressure on our updates because they were over a longer period. That you want to make them like better because you're covering 3 months, but I think we've gotten into a rhythm now of monthly updates, and I think everyone just kind of needs to approach this differently. But it's a conversation, and I think it's a good discipline for businesses to have.
Yeah, we always talk about on the Australian Business Podcast about being ready to sell, like the cliche built to sell. Even if you don't sell, it's a wonderful practice to be in. And I think that you touched on a point before about ambassadors. I just want to double click on that, which is one of the reasons that I've always thought that the Birchal platform would be really interesting for Rask to pursue, because obviously we have a huge community, over 200,000 people. But I remember we launched an investment service recently, Matt, and someone said, I'm not sure if I'll invest with you, but I'd rather invest in you if there's a way for me to buy shares in the Rask group. And I thought that was funny. But that's the reality. Is what you would typically find is, like you said, the gin example. For us, it's always been like, if we offered shares to our community, they're more likely to use us for everything else that we do because they are owners of the business. And I've heard wonderful stories of, like ketchup brands in the US being built by the earliest investors, and the people, they then bring them in to help them design the different flavors and choose the labels and these types of things. And then they become instant super fans. And that sounds really interesting for businesses to pursue, like you said, with the story, but also just businesses that want to scale in multiple ways that could pay off.
Absolutely. And fans is an interesting one. There are examples all around the world of sports teams that are owned by fans. Green Bay Packers, FC Barcelona, and it's aligning that kind of that fierce support of something that you identify with and can own in a small way. But practically, you have a conversation with someone. It's like, well, I want to invest in you. I love what you're doing. I love the content that you're putting out. How can I do that? How do you do that? And this is one of the key practical benefits of what we do, is that often, it's not uncommon that businesses have these advances from people. It's just like, someone's just like, you're doing an awesome job. I'm like, I love being a customer or a listener or whatever. I'd love to support you more, but how do you take that further? And I think that's one of the underappreciated benefits of what we do, is that there is a system and there is a framework, because absent that, you need to chat to a lawyer. Then you need to have, a bunch of conversations, and you haven't been through it before. So they might start to ask you for things that you don't want to give, and then it all gets a little bit awkward. I hear founders tell me, family and friends rounds, like, if you've got a rich uncle or a rich auntie that is may be interested in your business, or you might be interested in raising money from them, or other people that you know that are in your network, it can be really hard to go there and ask them for money. Say, you know, we're raising capital. Would you be interested in investing? I've had founders that have told me that running a crowdsourced funding campaign has kind of taken the awkwardness out of these conversations. Everyone's got a network of people that might support you. I imagine you do too, right? And then if you're running a public process, you can share the information with them. You don't have to push too hard. It's just like, hey, you know, this is, if you would like to be involved, this is how you get involved, and the next move is yours. There's all of these benefits, these other benefits of what we do in an organised system, and kind of normalising this that I think are underappreciated but will grow over time.
Mm. I remember there was a raise on the Birchal platform. Oh, before I get to that, actually, I love the Birchal platform. For anyone that doesn't have an account, you should sign up for one as an investor, because you get to see what other companies are doing and how they go about them, and you discover really interesting things. And it's been really interesting for any investors who have thought about private markets that listen to this or watch the show. Go and check it out, because you can actually hone your craft and learn about real businesses that you might know. But I remember being on the platform one day, and I can't remember the name of it. I think they made lipstick, and it might have been like, it was something like eco kind of friendly.
Guess the Black.
That's the one. Yeah. And I remember I was so, like, I downloaded the document, I read it, and I was really interested. I was telling my wife about it. And so I ordered some of the products, and then I got them and the dogs ate them all. So that was a bit of a disaster, but it was really fascinating to go.
No harmful chemicals.
That's it, they were fine.
At all, so that'd be fun.
Yeah, the punchline is they were okay.
Yeah.
Don't worry about the dogs. But it was just great to see, like, to hear, because a lot, like the founders are writing these business notes and telling you about their business, and it's not like all that double speak that you get on the stock exchange, where it's all like there's like 10 layers of PR and legal teams that go through every sentence. It's real businesses, and it's really interesting to hear what they're doing and who they are and how they go about things, and you can communicate with them, which is great. I was going to ask you about the investor side of the platform. So you said the maximum someone who's not considered a wholesale sophisticated investor is $10,000 per offer per year.
Yep.
And do you find that there's a particular type of investor that comes to the platform seeking something?
It's a great question. And I think the short answer is no, that the investors tend to, or the audiences tend to mirror the companies that are raising, the audiences that are interested in them.
If I sign up to Birchal, say I'm interested in that Guess the Black one.
Yep.
Can I sign up to like the generic Birchal platform and like get an email of like the latest offers and those types of things that are coming out?
Yeah, absolutely. So if people create an account on Birchal.com, they'll get a weekly newsletter that talks about expression of interest campaigns that we've run. The EOI campaign is like a pre-offer marketing campaign where a company's building the audience for their offer, but also having conversations with investors, and then the offer follows. So if they sign up to Birchal, they'll get our comms. But I think on that, this increasing awareness or appetite for private markets and for business, what we've observed and what I've seen and heard anecdotally from founders, there are so many people that are really interested in business, in Australian businesses, and haven't really had the opportunity to invest or even see or become aware of these businesses. It's broader than VC and tech. And although there's great work that's been done to grow the startup and innovation ecosystem, there are so many people that are interested in business and would like to invest in private markets, but they will never go to a startup pitch night or become a part of an angel network. That doesn't mean that they're any less interested in business. They're just not plugged into that ecosystem. And that's the huge opportunity that we have and that this industry has, is that, 10 million investors, 10 million people in Australia that are already invested. And this is a way for companies to get out there and access that audience. There are lots of people that have been successful in business that, have disposable, income to invest, and that identify with the struggles and the challenges of founders. There's one investor, a really prolific investor on our platform, and he leans into the riskiness of this asset class. And he's been investing for 40 years. And he says that he generates his alpha by working with companies, by telling them where, the rocks are in the stream, the things that he's seen before. He's been through 4 cycles. So he's like, he accepts that this is a risky asset class, but his strategy is to work with companies. So he'll identify founders that are coachable, that will accept or listen to what he has to say, because he sees that that's a way for him to protect his investments and generate his alpha in the things that he selects. We just want to do more of this. Like, it's working, and I mean, that is utopia for us, where people sitting in a pub on a Friday night and talking about their portfolio of startup investments, because it's better to do that than to talk about some of the other things that I think people waste their money on, because it's productive, it creates jobs, and it'll take us forward as a country.
Could even be the pub that they're sitting in.
Exactly.
One final question, which is more so, because I will put complete links in the show notes, both for all the business owners that listen. So there'll be a link there for business owners to learn more, but also for investors. So check that out, whether you're on YouTube or wherever you're listening to this, Spotify app or whatever. Just, you can click that link after the show's done in just a moment and go and check it out. It's free to create an account, right? So, more from the investor side, obviously lots of investors listening to this. If you could guide them just initially to say what kind of things, what should they be reading? Like, what particular documents are there for them to go and look at? How do they make the most of it?
Yeah, so the way that a campaign works is a company will open an expression of interest campaign. So investors need to know that at that point, what the company is asking of you is to make a non-binding indication of interest. So our platform will ask a few questions: why you're interested in the company, and there's drop-down field, and then how much you're willing to invest. Now, the information that the investor has at that point is deliberately fairly high-level information. So we look at the data on that basis. And the high-level information is the profile, the company profile page that's built on Birchal. Often there'll be a campaign video. Companies will have a webinar with someone from our team at some point through the campaign, that EOI campaign. So if that's been recorded, that will be available on the platform. But answering that information and then being receptive to the information that will flow through that expression of interest campaign. The reason why we do it that way is it gives the company the opportunity to listen to investors. So if they've worked on the offer document and then just sent the offer document out there, they're depriving themselves of the insight that they get from having conversations with investors. So
feedback.
Absolutely. And so what I would say to investors is, express interest. And if a founder kind of reaches out for a conversation, if you've got the time, do it. I chat to these founders every day. I love my job. Like, it is so inspiring to spend time with people that are out there and building things. And I think many investors agree with that too. So it's an incredible opportunity. If you see something that you're interested in and then an investor reaches out, they're genuinely seeking feedback on how they're going to tell their story. When the offer opens, there is an offer document. So that's the formal part of it. And absolutely review the offer document, read it cover to cover. If you've got questions, ask questions in the discussion forum. Take up that right, take up that opportunity. There are some investors that will be asked to help with price discovery. So that's part of our process. So companies will share their offer document in draft with people that they've been in conversation with through that expression of interest campaign. So, if you're an investor, you've expressed interest in an opportunity, you've had a conversation with the founder, you may get a follow-up inquiry where the founder will offer you a look at the draft offer document before they've launched. Because once they launch, they can't change anything about it. And they might ask you things like, what do you think about the valuation? How have I presented the opportunity? Is there more information that I should give about this, that, and the other? Have I got the strategy right? If many people are up for it, but if they're up for it, it can be a lot of fun, and you can learn a lot by spending time with these people that are out there that are building things.
Yeah. If you've never been a founder, but you've always been fascinated, go and check it out, because it's always just so much fun. Like you said, I really resonate with that. It's so good to be around positive people, and oftentimes the most optimistic people are the founders. But if they've already established businesses, they're not necessarily just brand new. If they're established businesses, it's not just blind optimism. It's also, I've got a few scars to get here. And you can learn so much from being around them and give them advice as well. And they appreciate your attention. Mate, this has been heaps of fun to catch up again. And I'm so glad we got to do it in person. So we'll put all of the information in the show notes for folks to click on. Otherwise, they can head to birchal.com and create a free account. I encourage all founders to check it out, understand the process. And like I said at the top of the show, even if you don't sell, at least go and learn, because it gives you the kind of, you kind of flex the muscles that you need to flex in order to be ready to sell if you're a business owner too. So Matt, thanks once again.
Thanks for having me.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.